all relatively well.
Good afternoon, ladies and gentlemen, and welcome to the Seed Innovations Limited Annual General Meeting. Throughout this recorded meeting, attendees online will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. I would now like to hand you over to Chairman Ian Burns. Ian, good afternoon, sir.
Good afternoon. Good afternoon to everybody who's joined us today. Thank you very much for taking the time out. As we did last year, what we're proposing to do is do the formal part of the AGM first. Then I'll hand over to Ed and the rest of the team to talk you through a presentation about where we are. And then we'll have an opportunity for some questions and answers at the end. I'll start with the Annual General Meeting of Shareholders. This is the 2024 Annual General Meeting, and welcome to all the shareholders who joined us today, in person or virtually. As you know, I'm Ian Burns. I'm the chairman of the company. I'll act as chairman of this meeting. So I introduce Ed, who's sitting to my right. Ed McDermott is our CEO. Lance DeJosie, who is further to my right, who is our finance director. Luke Cairns on my left, who is a non-executive director. Now, Alfredo is not here at the moment. It's one of the hardships of living in Guernsey that flights get delayed. He should be here within about 5 minutes, and you'll see him joining, and hopefully here in time to share in the presentation. Also introduce Jodie Bisson, who's from Obsidian, who will be acting as company secretary and keeping the minutes.
You have to let him in.
Sorry, Alfredo has just arrived. Okay. The quorum necessary to hold this general meeting of the company is any person holding at least 2 ordinary shares in the company present in person or by proxy and entitled to vote upon the business to be transacted. As a requisite quorum is present, I declare this annual general meeting open. I would like to acknowledge the apologies we have received from shareholders who could not attend today's meeting due to unavoidable commitments. Before we proceed, I would like to go over the procedures for today's AGM. We will follow a structured agenda, and after the formal section of the agenda, we'll move to the shareholder update. So we move to the resolutions for the meeting. If you could put them on the screen. Okay. Resolution 1 is to receive and, if thought fit, to accept the reports of the directors and auditors of the audited financial statements for the year end. Are there any questions in the room for these resolutions?
No.
There being no questions, I now propose to put to the vote of the meeting number 1 set out in the notice covering the meeting as an ordinary resolution. We've received proxy votes as detailed on the screen and in relation to this resolution. So I declare resolution 1 carried as an ordinary resolution by the requisite majority. Resolution 2 is a resolution that the company be authorised to make market acquisitions of its own shares of 1p each, which may be cancelled or held in treasury, subject to a number of conditions as detailed in the AGM notice, most notably that the maximum number of ordinary shares hereby authorised to be purchased shall be a number equal to 14.99% of the ordinary shares in issue on the 24th of September 2024. Any questions in relation to this resolution? There being no questions, I now propose to put the vote to the meeting resolution number 2 set out in the notice convening the meeting as an ordinary resolution. We've received proxy votes as detailed on the screen now in relation to this resolution, so I declare resolution 2 as carried. Thank you. Resolution 3 is to reappoint Grant Thornton as auditors and to authorise the directors to agree their remuneration. Any questions in relation to that? There being no questions, I now propose to put to the vote to the meeting resolution number 3 set out in the notice convening this meeting as an ordinary resolution. We've received proxy votes as detailed on the screen in relation to this resolution, so I declare resolution 3 carried as an ordinary resolution by the requisite majority. I now hand over to Who cares to deal with resolution number 4?
Thanks, Ian. Resolution 4 is in respect of the reappointment of Mr. Ian Burns as the non-executive director. Are there any questions related to this resolution? There being no questions, I propose to put the vote of the meeting resolution number 4 set out and notice convening this meeting as an ordinary resolution. I now put resolution number 4 to the meeting. We've received proxy votes as detailed on the screen now in relation to this resolution. So I declare resolution 4 carried as an ordinary resolution by the requisite majority. I'll hand back to Ian for resolution 5.
Thank you. Thank you very much, Luke. Resolution 5 is that the directors be empowered to issue or allot equity shares for cash, providing that this power shall be limited as set out in the notice and which will expire upon the date of the next annual general meeting of the company. Any questions in relation to this resolution? There being no questions, I now propose to put the vote to the meeting resolution. Resolution 7, set out in the notice convening this meeting as an ordinary resolution. Again, we have received proxy votes as detailed on the screen now in relation to this resolution, so I declare resolution 5 passed. Let's say 7 before. We now move to a special resolution. The directors be generally authorised to allot equity securities for cash pursuant to the authority conferred by the previous resolution, as if Article 6 of the Articles or any other shareholder rights of preemption did not apply to such allotment, provided that this power shall expire at the end of the annual general meeting of the company to be held in 2025, unless renewed, varied or revoked by the company prior to the date. And the company may, before the expiry of the period referenced in paragraph above, make an offer or agreement which would or might require equity securities to be allotted free of the preemption rights. And the directors may allot equity securities free of the preemption rights in pursuant of such offer or agreement, notwithstanding that the authorities conferred by this resolution have expired. Any questions? If there being no questions, I now propose to put the vote to the resolution to the meeting for a vote. Again, we've received votes as detailed on the screen, so I declare that this special resolution has been passed by the requisite majority. So that brings to an end the formal part of the AGM. So is there any other matters relating to the AGM, matters that anybody would like to bring into the meeting? Okay. So before Ed makes his presentation, I'd just like to say that Seed has had a history of achieving results through targeted investment portfolio, generating liquidity events and delivering value for shareholders. This was highlighted when we rewarded shareholders with the implementation of the share buyback program and issued a special dividend. As our current investments mature, we'll continue to explore similar opportunities. Despite the challenges in our operating markets, we remain confident in the strength of our portfolio, which features a mix of liquid, pre-liquid and longer-term opportunities within disruptive high-growth life science and technology ventures, as well as allowing for more opportunistic short-term trading strategies. Furthermore, with approximately £3.5 million worth of cash as of the 31st of August, we're well positioned to capitalise on the current environment, which presents exciting opportunities to acquire undervalued assets. Although our market capitalisation of approximately £3 million currently falls below our estimated net value of approximately £10.8 million as at 31st of August, we remain optimistic that our strong cash position, dynamic portfolio and promising investment pipeline will soon be recognised and reflected in a revaluation of our stock price. Indeed, two of our directors, Ed and Lance, recently bought more shares in the company, demonstrating their commitment and belief in our strategy. We look forward to continuing to deliver sustained value to our shareholders through diligent portfolio management, the identification of new opportunities and strategic market engagement. At this point, I'll hand over to Ed to talk you through a presentation.
Thank you very much, Ian. Firstly, I want to thank our shareholders for ongoing support and patience through what has been a sustained period of very difficult market conditions, particularly across junior markets with not a lot of liquidity around, and this seems to be across the board, much like a lot of other exchange-oriented funds. We have been trading at a big discount to NAV, we think very unfairly, but nevertheless market conditions have prevailed for a few years now. Obviously, our shareholders don't see the hard work behind the scenes, and on a day-to-day basis, you can be assured that there is a great deal of work that goes into Seed Innovations. And on that note, I'd like to thank the board and our advisors for their hard work. As Ian has already covered, junior markets particularly have remained a very rough place. It's been a long time, and it's been a case of seeing lots of different companies across lots of different sectors run out of capital and run into all kinds of problems. And I'm pleased to say that on the whole, our largest assets, namely Avextra, Juvenescence and Clean Food Group, have continued to thrive. And indeed, when they've raised cash, it's been at a premium, and often a significant premium, to Seed's initial position. And with that in mind, I'd like to take a minute just to reflect upon the last 12 months of Seed Innovations. And in doing so, I'm going to put aside market sentiment, feelings of frustrations, which we all share, and essentially just present facts. So in the last 12 months, we've conducted a share buyback of nearly 20 million shares, or 9.31% of the issued capital. We've reduced our total shares in issue to 193 million shares. We've paid a special dividend of 1p per share, which is just over £2 million to shareholders. Completed the sale of Lead Gaming. I've increased my personal holding to over 3% of the company, totaling over £140,000 worth of shares bought. Lance de Jersey has also increased his holding. We've positioned Seed to be in a very strong cash position at a time where there are deep value opportunities in the growth company space. And we have also, in the case of two of our largest assets, proven that they're in a very strong position by raising capital at premiums to our last investment and very significant gains to Seed's entry point. Now we'll move into the presentation. So as an overview, Seed is a closed-ended fund. We're Guernsey-based and we're regulated by the Guernsey Financial Services Commission. We're also quoted on London Stock Exchange's AIM market, which means we have a nominated advisor, also known as a nomad, which adds another layer of regulation and administration to the business. This hopefully will give shareholders confidence that we are regulated by multiple institutions, and we have 2 independent non-executives on top of that. The board is very, very experienced, and we have a versatile portfolio. We try and balance the portfolio by mitigating risk to any one single asset, and there is a history of delivering real returns on the investments that we've made. And of course, this is partly shown in the maiden dividend that we've paid during this year. In terms of our investment approach, I don't want to labour any points, but our process is quite broad in terms of what we look at, but the process by which we make our investments is very detailed with regards to due diligence. You're going to hear a little bit later on how much energy we've put into analysing a huge number of opportunities during the course of the last 12 months. This is ongoing. We obviously do take significant risk as we're geared towards growth companies, but by remaining very, very close to the companies that we invest in, this is obviously less easy with legacy assets that we still have a couple of. But certainly the investments that this team has made, we have always tried to be very close to the companies and make sure that we can add value more than just bringing capital to the table. So we have a bunch of different skill sets on this board that can be utilised by those companies. And again, we like to stay very close to them to make sure that we're taking an active position. And only where it comes to our short-term trading strategy do we take a passive position. Slide, please. In terms of the key data, we're currently trading at a significant discount, and Lance is going to cover the exact numbers around that shortly. But we're trading in the 1.4 to 1.6p range, against a NAV of nearly 5.6p. We're actually trading below cash at this point, which is unthinkable. But again, I have to give my honest view. I think it is a very good opportunity for people who wish to buy stock at that level. Notably, our largest shareholders are Jim Mellon, over 10% of the company, Peter Saladino, who's a prominent North American businessman, and myself at 3%. With that, on to highlights.
Okay. So, I mean, per Ian's opening statement, NAV stood at 10.8 million at 31st of August, compared to a market cap of about 3 million, 3.1 million. We're also holding 3.5 million in cash. And in the last year, we paid out 2 million as a special dividend and spent another 500,000 in share buybacks at an average price of 2.6p per share. That 10.8 million NAV represents approximately 5.6p per share, as Ed just said, yet the market price is still currently just 1.6p. That means that we as Seed's management are currently valuing Seed at 3.5 times what our current trading price is on the market. Or putting it differently, we're trading at a 70% discount to NAV. In fact, at 31st of August, cash represented 1.8p per share. So Seed was even trading at 12% discount to cash at the end of August. Basically, the current market price of Seed shares takes no account of our investment portfolio of about £7.25 million, which again, in price per share is about 3.75p. That portfolio includes positions in Vextra and CFG, which represent about a third of the NAV or about half of the invested capital, and both of which, as Ed said as well, have significantly raised money in the last year or so above our carrying valuations in some cases. And actually, in the case of Vextra, we've been able to sell down some of that as well. So whilst the market appears to attribute zero value to that, we're carrying out 3.9 million, and we think that there's support for that in terms of what we're seeing out there. I mean, some discount is to be expected because the portfolio is not liquid, it's not immediately realisable. But something around about the 40% would be more in line with other exchange-traded funds. Certainly not 70%, and certainly not seeing a discount to cash. That's ridiculous. If we were trading at a 40% discount to NAV, that would be a trading price of about 3.3p, about twice where we are today. If it was a 50% discount, it would be 2.8p, still significantly above the 1.6 that we sit at. So, I mean, in conclusion, we continue to believe that the market is undervaluing Seed. For this reason, we believe it's a good value buy at this point in time, and it's certainly the reason that Ed and I have put our money where our mouth is and bought more stock in this. Back to you, Ed.
Thank you. Next slide, please. So in terms of the portfolio overview, I don't want to go into a huge amount of detail about each and every company because I believe this forum is really going to be more geared towards answering questions at the end. And I think we're, some of the questions we've seen coming through, and should I say statements in some cases, are going to be somewhat answered by the questions we deal with at the end. But at the moment, we have 6 active venture investments and 1 short-term trading asset. And of course, cash, which represents 33% of our net asset value. 3 of the investments are publicly traded and include Little Green Pharma, an Australian-based medical cannabis company that has global assets, particularly strong in Europe as well. Although the share price on that particular asset has been trading very, very poorly, I have to say that the company are doing what is expected of them, and when you stack them up against other companies in the cannabis space, I think they're doing a good job. It is just unfortunate that they're caught up with the same issues that we all share on junior markets, which transcend more than AIM to the ASX and TSX as well. And you know, we still believe that there's a lot of value in that company. It's just currently not on show in form of the share price. We also have Portage Biotech. It's a biotech company trading on NASDAQ. The history of Portage has been a largely good one for Seed Innovations. I'm going to go into a bit more detail on that later in the answering of questions. But we essentially sold our position to Portage in a company called Intensity Therapeutics at around $10, and we exited the bulk of our position between $30 and $40. So again, it was a good example of the progression of one of our investments from private to public to cash in the bank. Pantheon Resources is a short-term trading hold, and again, we'll cover some detail on that as we move through the presentation. But essentially, the bulk of our invested net asset value, aside from cash, is over £6 million, and that's just Avextra, Juvenescence, and Clean Food Group. Avextra, a German medical and pharmaceutical cannabinoid company. Juvenescence, a biotech company focused on tackling the diseases of aging. And Clean Food Group, a biotech company commercializing its precision fermentation technology in order to produce bioequivalent food oils and fats, creating key sustainable ingredients for the food and cosmetics industry. And again, there is no reason for us not to be feeling positive about those companies, and it makes absolutely no sense that they are valued at less than zero in terms of our share price. We can't control share price, but we certainly can take a very active interest in the companies that we're invested in, and that's what we do. And thus far, we're certainly happy that we've shown that we can extract some value from those companies, as Lance alluded to, where most recently, of course, we sold essentially the best part of what we'd invested in Avextra, and we still have a carrying value that has increased in value subsequently. And again, we're seeing companies like Clean Food Group raise capital at a significant premium, certainly to our entry point, and of course receive non-dilutive grants, which I would like to hope we will see more of over the coming months. So if we move on to the summary of these parts, I'm going to hand over to Alfredo, who's going to walk you through the portfolio breakdown.
Thank you, Ed. So one of the key points that will likely catch everyone's attention is our strong cash position, which represents about a third of our NAV. Being in the privileged position of having this liquidity gives us the flexibility to explore diverse investment opportunities. Looking at the chart on the left, you will also notice that Avextra remains our largest investee company in terms of NAV, even after a partial exit, which I'll discuss further in the next slides. In the top right chart, you can see that we are not just focused on cannabis. Cannabis makes up about 42% of our portfolio, a number that has significantly decreased following the partial sale of Avextra. In the bottom right chart, you will notice that the majority of our investments are in private companies, which aligns with our strategy as an AIM-quoted investment company, offering exposure to disruptive, high-growth ventures typically inaccessible to everyday investors. While we primarily focus on private companies, we do have some investments in publicly listed companies, such as Pantheon Resources as part of our short-term trading strategy, or Little Green Pharma, where we believe that we can add value. Next one. So about Avextra, it remains the largest position in our NAV, excluding cash, and we were fortunate to have invested early at an attractive valuation. Our partial sale of Avextra about a year ago at a roughly 60% premium to our entry point allowed us to de-risk the investment by recovering nearly all of our initial capital while retaining a meaningful position for further upside. During the past couple of years, Avextra continued to attract investment at increasing valuations, reinforcing its value within our portfolio. The company remains focused on being a truly medical cannabis company, including a strong emphasis on drug development. Clean Food Group is a UK-based food tech business that is pioneering sustainable oils and fats solutions for global food and cosmetics manufacturers. It has become an increasingly important part of our portfolio. We were also early investors in CFG at an attractive valuation, and in the past years, the company has attracted institutional and commercial partners such as Agronomics, Alianza Team, and Döhler Group. CFG is working hard to create a more sustainable food and cosmetic system on a global scale. Cannabis has been a key focus for the company, reflected in both our past successes and our current investments. Notably, Lumuvera and EMAC were unique success stories in the European cannabis industry. Medical cannabis still represents about 42% of our invested capital and about 28% of our NAV if we include cash. However, the cannabis sector has faced significant challenges recently, with almost all cannabis-related stocks experiencing sharp declines as the industry fell out of favor. This downturn also likely affected Seed Innovation's share price. In response, we adjusted our strategy and reduced our exposure. Our last medical cannabis investment was made a couple of years ago, and since then, we have focused on other sectors, such as Clean Food Group, that better align with our objectives. As I mentioned earlier, our partial exit from Avextra at a 60% premium allowed us to de-risk that investment by recovering nearly all of our initial capital, while retaining a significant stake for potential future gains. Achieving this in the middle of a cannabis market crash is a testament of our sector expertise. We continue to closely monitor the cannabis market and may reconsider our position if we see signs of improved market sentiment and an acceptable regulatory environment. Yeah, please.
All right. Thank you very much, guys.
Just a bit of a summary on this. Look, at the end of the day, we all want the same things. We want a higher share price. We want more liquidity. We want higher net asset value, assets that hugely outperform the market, and to be able to see regular income from those assets. It's not realistic, unfortunately, in this market. It doesn't mean that the foundations for value haven't already been created and won't be created in the future investments that we make. We could have invested the capital that we have at hand 10 times over already, but ultimately there are a number of reasons why some investments that in many cases look quite good aren't necessary for us, and that is because in some cases they are too big. We can't exert any influence on them. In some cases they're just a little bit too early. But one thing that I can say with real confidence is that we've had very interesting discussions and a number of meetings that have led to situations where we've offered money to companies at valuations that they didn't like. Now, interestingly, in some of those cases, those companies are starting to come back to us with much more realistic views. We're doing this because that's the right thing for the shareholders. We could have easily said, okay, fine, and bowed to those pressures or other investors who were willing to pay that price. In our case, it is absolutely making sure that we make the right decisions with that capital. I hope in a fairly short time frame, you'll switch your screen on in the morning and see that Seed has made new investments. And you can be absolutely sure that we have negotiated a great entry point and crucially sensible rights that protect us as much as possible on the downside events and maximize our returns on the upside. Like you, I'm a shareholder and I only want the best possible outcomes, and that's what we're working towards, both with our existing portfolio assets and the new investments that we make. Right now, as we've already covered, the stock trades essentially at 30p in the pound, and that is a huge discount, which I believe makes the shares very attractive.
Okay, thank you very much. Thank you for everybody for their presentation. What we're going to do now is a question and answer session. Thank you very much to those of you who have been asking questions during the course of the meeting, and also to those of you who asked questions ahead of the meeting. What we've done, quite a few, as you can imagine, quite a few of the questions are broadly similar. So what we've tried to do is pull together kind of conglomerate questions that hopefully cover all the points. But if in any case that there is any questions that you feel that we don't answer today, please get back in touch and we'll try to answer your questions. So I'll start with the first question, which is, if the share price continues to stay well below the asset value, would there come a time to consider closing the fund, cashing out and returning the funds to investors? Ed, do you want to answer that question?
Yeah, very happy to. It's absolutely always a consideration as a board. These are the discussions that happen in the background all the time. We're always actively reviewing the portfolio and making sure that the decisions that we're making are the right ones. So, of course, it is an option, but in my well, I believe the board's view, it's the absolute last action we would take, and particularly in a slump of a market. The worst thing any fund can do, and I don't have them to hand, but there's lots of examples where you can see sectors or funds have gone through a difficult period. They've sold their assets at silly low valuations, and lo and behold, a year later, those assets are worth 2 or 3 times what they sold them for. So it is absolutely not the time to be looking to sell assets unless you're going to get outsized market valuations for them. The board is obviously very focused on executing our strategy and maximizing long-term shareholder value. We obviously regularly review our options as stated, but right now we believe we've got a lot of untapped value in 2 or 3 of our largest assets, and of course the opportunity to invest while capital constraints are huge across the market and we have cash to invest. So making good decisions now is critical. In these kind of markets where things are really, really tough, that is where the biggest possible gains are seeded. That's where the foundations of huge wealth is created. And again, that is evident through history. These are cycles, and we believe that we've certainly come through the worst of it, and we're starting to see slightly more positive winds ahead of us. With this all said, if we're unable to make new investments and create real momentum in the next 12 months, the fund returning assets to its investors is obviously a serious consideration at the next AGM.
Okay. Alfredo, one for you. We've done a buyback this year. Why not do another one?
Exactly. So we conducted a buyback between October 2023 and May of this year. We appreciate the suggestion to do a new one, and we may consider it in the future, hence renewing the authority at this AGM. But right now, we are currently taking a break from the program. It is important for us to strike a balance among new investments, share buyback programs, and special dividends, which means that continuous buybacks wouldn't be sustainable. At the moment, we are evaluating various opportunities to deploy the available cash in ways that align with our strategy.
Okay. One of the questions which comes up quite a lot is, obviously, we've had a period apparently of quiet during the last few months where we've not made lots of announcements, lots of new investments. So I guess the question is, well, what are the directors actually doing at the moment? Because it doesn't look like to shareholders as if there's anything going on. So do you want to touch on that, Ed? What's going on in the background? That obviously we're limited in what we can talk about, but maybe you could talk about the process rather than the result.
Yeah, very happy to. One of the downsides of being listed is that we have to be very secretive, and we can only talk about news and published material that's already in the market. So we can't demonstrate to you and ask you to come and sit in our offices and watch what we do all day. Believe me, I wish you could. I wish we could film it. I wish we could put it out there so that you can all understand that we work very, very hard indeed. But all I can say is a significant portion of our time is dedicated to researching and considering due diligence on potential investments. I've personally driven over 3,000 miles. This is obviously just in the UK, 3,000 miles during the course of this year, taken many dozen train trips in order to visit premises, kick the tires, and get a really thorough understanding of what a potential investee company does. That obviously doesn't include the work that I've done around our existing portfolio. And, this is not just me. There are other people on this board who are actively involved in the day-to-day management of the company. And of course, it doesn't include the calls, the meetings, all the meetings I had in London. But certainly more than 50% of mine and Alfredo's time is taken up with having initial and secondary calls and physically looking at business opportunities that come through our many sources of deal flow. Lance is often involved in the support in the due diligence phase. So typically when a company we're looking at goes from a second and third and fourth and fifth and many, many calls to a point where we're actually looking at potential term sheets. And certainly when we want to look at the financials of a company, Lance gets very involved in that. I'd say another 30% of my time is more geared towards the existing portfolio companies. In some cases, for example, Juvenescence, where it's a very large and legacy-oriented company, although I make every effort possible to speak with Jim, Greg Bailey, and some of the management team at Juvenescence. We are a very, very small part of their lives, unfortunately, even though it's a big part of our portfolio. In many cases, the businesses that we're looking at have been proper operating entities with significant revenue and real growth opportunities. In many cases, the board of Seed can actually help those companies very much in terms of new customer introduction, cheaper debt providers, less costly suppliers, and all manner of other different things through our individual networks as well. And we've come very close on a few occasions. One such an asset actually got bought out from underneath us, but that is the reality of life. But ultimately, we're only interested in a deal that works well for Seed and gives our shareholders the best possible ROI. We obviously don't announce the investments that don't end up being made, but the silence doesn't mean that we're not trying to find the right investment opportunities. And of course, in addition, we're actively managing our existing portfolio and performing ongoing market analysis to ensure we are staying aligned with our strategic goals and that they're hitting their marks. Again, as I previously alluded to with companies like Little Green Pharma, they're actually doing very well versus their peers. It's just not reflecting the share price. We also handle a range of operational regulatory tasks. As I've previously mentioned, we're doubly regulated. We have Guernsey Financial Services Commission, and then we have AIM itself. And of course, we have regular board meetings to discuss our investments. And when it comes to some of the term sheets that we've put to companies, the board is involved in that process. Again, we have to oversee the buybacks, managing the PR and various regulatory market obligations. And I know the question that Ian raised, as we saw it on the screen, talked about Alfredo being a cannabis analyst, and that's not accurate at all. He is very experienced in the cannabis space, but he is also a chartered financial analyst. It's a significant qualification and provides a very strong foundation in advanced investment analysis and real-world portfolio management skills. And I would say similarly, Lance's responsibilities far exceed preparing accounts. He's very much involved in the day-to-day operations and management, as well as due diligence on the existing portfolio companies and new investments. So rest assured, we would love to be announcing successful investments and divestments frequently, but that just isn't the current phase of the market. But as I've said, I don't think it will be too long before you wake up and your screens are showing you that we have made investments. And you can be absolutely certain that we've put a lot of energy into making sure that we're going to get the best possible outcome.
Alfredo, do you want to say anything as well?
Yeah, so I don't have much else to add to what Ed already said, but I would like to take this opportunity to highlight some of the sectors we've been actively exploring specific investment opportunities just in the past couple of months. I obviously cannot disclose names of specific companies we've conducted due diligence on or are currently assessing, but all of that is well documented internally. What I can share is some of these industries where these companies operate, which include fintech, telecommunications. We've seen several opportunities in AI, of course, food tech, cannabis, but the ancillary services part of cannabis, mobility, and healthcare, not cannabis related.
One for you, Alfredo. One of the questioners said that cannabis stocks have been a car crash, which is probably not far from the truth. But what would you answer to that?
Yeah, so I addressed most of that question, I guess, during our presentation, but to reiterate, cannabis has historically been a focus for the company and continues to represent an important part of our NAV, and it is true that the sector has fallen out of favor in recent years. We've always been transparent about cannabis being a key part of our portfolio, but we cannot control global sentiment toward the industry. What we can control is how and when we invest, And we have a track record of successful cannabis exits, including Nuvera and EMAC, and even managed a partial exit from Apextra at a significant premium during some of the most challenging times for the cannabis industry. Recognizing the shift in market sentiment, we didn't sit idly by. We proactively adjusted our strategy, making our last cannabis-related investment a couple of years ago, and since then, we've been deliberately reducing our exposure to the sector as we identify new opportunities, for example, Clean Food Group, that better align with our current objectives.
Ed, one of the things which came up last year was how do we attract new investors to come into Seed? And obviously we've done some bits and pieces. I don't know if so the whole meeting can hear the kind of ideas and initiatives we've used this year to try to bring new investors and attract new investors to our register.
Yeah, thanks, Ian. I mean, there's lots of things that we do that are obviously, again, behind the scenes during August, which is obviously not the best month, but thankfully there were still a lot of people that I was able to go around and see around the city, which includes brokers, funds, etc., just to tell them with no agenda other than to either refresh or introduce them to Seed and the narrative. And again, that's something that goes on an ongoing basis, and we do that with our broker and advisors. But obviously, as a board, we've been proactive in reaching new investors through multiple channels. We've hosted in-person events, participated as speakers at various investment conferences, and we maintain an active presence on social media. Additionally, we've been developing unique video content to further engage our audience and communicate the value of our investments. These videos have actually been really, really popular, and as a format for communicating with shareholders in relation to day-to-day non-price sensitive information, we continue to do this. Our belief is social media is really important, but again, you have to be, as directors, we have a very strict set of rules as to what we can say and do, and indeed how we conduct ourselves, so it has to be in line with that. But ultimately, the push to find the right investments at the right price is the key focus of the executive team at this point, alongside those other activities for engagement.
Okay. Lance, one questioner asked if we've considered a group chat between shareholders and directors. The comment was made, I realise this could prompt both positive and negative communication, but it may prove very beneficial in the long run.
Yeah, I mean, look, we appreciate the suggestion, but the truth of it is creating a shareholder chat group will likely result in breach of market abuse regulations relating to transmission of price-sensitive information. Transparency and fairness in communications are critical to us, and we do aim to engage with our shareholders as much as we can, but we have to be in compliance with all our regulatory guidelines and requirements, which we believe we do well. And the way that we're doing that best at the moment is through these short form videos and through the other presentations that we make, like this format.
Okay, another one for you, Lance. Obviously, we've talked a lot about the cash balances that we've got at the moment, and the question just asked, is that money actually earning interest?
Yes, it is. Yeah, it's on deposit. It's on a notice account with a reputable UK bank. Current interest rate's about 4.9%, I think.
I think we can probably also say household name, can't we?
We could do, yeah.
Yeah.
Household name, yeah. Reputable UK bank, however you want to say. Yeah, it's one of the big boys.
Yeah. Ed, one for you. You once stated you don't want to hold an investment for multiple years. The questioner says, unfortunately, every share we invest in, we hold for years, mainly because they seem to go downhill. Please, would you now tell me what the investment plan is? I.e., how long do you want to hold stocks for?
Thanks, Ian. I think it's well addressed in the investing policy, which can be found on our website. But in summary, we expect to hold a mix of longer-term positions, and these sometimes include legacy assets that we, as a current board, haven't had any influence or essentially involvement in making. These can be longer than 3 years, but obviously that's not what we want to see. Of course, market conditions will have an impact on how long you hold any investment. When markets are bullish, you can tend to see a lot more liquidity, and you can be in and out of investments much more quickly. We obviously have pre-liquidity positions, as we like to call them. These are private companies where we expect some form of liquidity event, whether that be a secondary raise that we can exit through, or an IPO, or some form of M&A. And then, of course, we have our short-term trading positions, which actually to date we've been pretty successful with, particularly in some of our cannabis investments. This is going back a few years, but typically these are assets that we're going to hold for somewhat less than a year, and this can be anything from weeks to months. But obviously we have to, wait for the right kind of liquidity events, and all we can do in those times where companies aren't ready to be sold, or there be M&A because it's not advantageous to the company that we're invested in, then we just keep building these companies and supporting the management of the companies as best we can to make sure that they are well positioned when the markets do improve. And I think we can expect to see some improvement. I think we need to get the budget in the UK out of the way in early October, and I think after that we'll at least know where we all stand where it comes to any kind of nasty tax increases. Obviously, you'll be pleased to know that being based in Guernsey, we don't have that issue. So any assets that we do sell for profit, we pay zero tax on that profit. So there's pros and cons to many of these things, but obviously, as I previously said, I don't want to be selling assets really cheaply at the tail end of what's been a really tough market. I want to be selling assets when there's more liquidity around and we're likely to get much better valuations based on what we think are already undervalued companies in many cases.
Okay.
So, sorry, just to summarise, I'm long-winded there, but ultimately we want to be able to sell things for the right price rather than be curtailed by very specific time limits.
Okay. Now, one person's gone back and asked a question about Leap Gaming, which was obviously in prior years. And the question says, in my eyes, it's the reason we're down at these share price levels. All credibility in the fund was extinguished. You had Ed stating it was a pot of gold, then 2 months later it was sold at the snip. How does the board intend to building investor confidence? Management change, maybe, ? I wish I could answer some of the questions about Leap from an internal point of view. And when I write my memoirs in 10 years' time, the story will come out.
Yes, I certainly feel the same way as you do about that, Ian. And look, I'm very happy. We're very transparent about these things. And, as a board, we are human beings at the end of the day. And particularly when you inherit what are legacy assets that look excellent, but when you start to discover all the deeply buried shareholder agreements and things like that, it can be very difficult. But I just want to obviously make a point. At the time of the investment into Leap Gaming, I was not the CEO, and I was not involved in Leap Gaming. But when I did take over as CEO, the markets, and particularly the valuations around gaming companies, and there were very few that did exactly or very similar to what Leap did, were actually in a very buoyant place. Very quickly after taking over, those valuations started to decrease rapidly and without any great warning. But crucially, myself and the board became much more aware of, shall we say, the difficult shareholders agreement that we had inherited, which meant that although we could see that Leap had great potential, we, as the largest shareholder of over 45% at that point, had essentially the rights of a minority shareholder. So we had things very much at odds. Our only option really was to try and push Leap to go for an IPO. The company and the management of Leap were absolutely not ready for this. And there were other shareholders involved in Leap that certainly did not want that to be the case because, perhaps they had longer term views or they had a different design for Leap. Ultimately, had we not forced the convertible loan note terms, which was our last investment into Leap, we would have ended up in a position where we could have lost everything. So, you know, in summary, Leap was an investment that looked good until the real details emerged, and it was certainly one of the most challenging business situations that I have ever been involved in. Factum Inc. was quite challenging as well. Again, both legacy assets. And they took up a huge amount of mine and Lance's time, particularly, and the rest of the board were, you know, we were having very regular meetings about how tricky the situation was. But I think it's also worth mentioning that for the difficulties around assets like Leap Gaming, which, you know, let's remember we didn't lose any money on it. Yes, we certainly believed had things been had we had the control that we deserved by virtue of our shareholding, we think we could have had a better result. The markets did drop at the time, but even with that, I think we feel we could have had a better result. But it's worth mentioning, you know, shareholders were really angry when we sold Portage between $30 and $40. You know, that is now less than $1. There was huge anger when we sold EMAC Life Sciences. We were the only investor, this is Curaleaf, who bought it. Curaleaf, we were the only investor that got out in full cash. And the deal that the rest of the shareholders received was at $21 a share. Those shares are now under $4. So look, as CEO and also as members of this board, we have to make very difficult decisions. Markets change frequently. What is a great investment at one point can very quickly be hurt by some regulatory movement, for example. It's certainly been one of the most difficult markets in the last 30 years. If you look across AIM as a good example, or the ASX or TSX, you will see that, you know, many thousands of companies between those exchanges have had very, very difficult times. There is absolutely no denying, because it's factual, that AIM is having the worst liquidity for over 20 years. You know, it's across the board. We are not unique in that respect. What we do have is private assets that in many cases are trading much more valuably than public assets. So, you know, we've had a lot of challenges, and Leap was definitely a challenging one. But we're optimistic of a much better future, at the most part, due to the team that actually made the investments into Avextra and the likes of Clean Food Group.
I think one of the lessons that we learned, and which informs our current due diligence process, is around the cultural issues in relation, particularly to smaller private businesses. And by cultural issues, I mean that I think we would regard ourselves as relatively tough but fair and straightforward business people. And I obviously can't go into detail, but what I would say is that not everybody sometimes sitting across the table necessarily shares those values. And that is quite difficult sometimes to discern when you're going through a due diligence process, because people tend to tell you what they think you want to hear.
Yeah.
And I think we are much more savvy to that particular point now, and that adds a bit more time to the due diligence process. But I think it's so valuable, and it's a lesson which we've learned the hard way, I suspect.
I would totally agree, and I think, you know, the reality is, unfortunately, there's a lot of entrepreneurs out there that raise money at all costs, and that in some cases means lying, and it's very difficult to discern what is truth and what is lies in early stage companies. You can see across the whole VC space, and PE also to a lesser degree, that there's a lot of funds out there that are having a very, very tough time, because they're also competition in the market to invest in those companies. But certainly we take nothing lightly, and that's why we've been so, some might argue, slow in investing that capital, because we absolutely want to make the best possible decisions and make sure that not only is the investment appropriate for our shareholders, it's something that we can have a great deal of influence on. And we don't want to dance to the tune of what an entrepreneur thinks his business is valued at. We want to be able to use real world examples And we also believe that, you know, our pounds are possibly worth more than certain other people's pounds because of what we bring to the table with our board and their experience.
Alfredo, one for you really, and this actually I can echo. It says, the questioner says, I was really happy to receive the 1p dividend, as was I, and I was very pro of the buyback. Can we expect to see more of this? You've touched on the buyback already, but do you want to talk specifically about our approach to dividends?
Yeah, so we do share that enthusiasm for dividends and buybacks, and hopefully after this presentation and Q&A, investors realize that we are working hard to make more of that possible. And that includes dedicating a significant amount of time and effort to adding as much value as possible to our NAV by actively supporting our investee companies in their growth and working towards successful exits. If and when that happens, that could lead to more opportunities for special dividends in the future. We understand the importance of returning capital to shareholders, and with further progress in our portfolio, we hope to deliver more buybacks and more dividend distributions as our strategy unfolds.
Okay, thank you. I'd like just to recommend actually the short videos that we've put out during the course of this year, which has been part of our process of trying to communicate with shareholders and other interested parties, people interested in seed. And one of the questioners has said in one of your videos, Ed, you said there's a lot of untapped value in publicly listed stocks. What did you mean by that?
So the reality is, for the first time in a lot of years, quoted company valuations are lower than privately held companies. Typically, public companies would trade 1 to 2 years in advance of what their numbers might look like and the trajectory that they're on. More recently, you've seen companies that are privately held, you know, because this liquidity issue has been, and liquidity and sentiment has been so tough, particularly in junior markets, that, you know, companies that any form of selling pressure can bring a company stock down by 20% on fairly low volume sold. So what I mean by that is essentially, Seed is a good example. Agronomics is another good example. Companies that traded above NAV for reasonable periods of time are now trading at steep discounts to NAV. And this also goes for a lot of operating companies that have, in some cases, are producing cash, don't have a lot of debt. You know, oil and gas is a good example. There's a number of AIM companies that, you know, produce reasonable amount of oil and gas and reasonable amount of free cash flow, and they're trading at, you know, 25% of what they would have been 2 or 3 years ago. Obviously, it doesn't mean the market's right. So sometimes looking at listed companies where you have valuable assets that you can essentially buy for cents in the dollar versus private companies, which are much more hard to value. And yeah, essentially what I'm saying is I think there's a lot of opportunity in the small mid-cap junior space where you have companies that are trading at really low valuations relative to the assets that they hold, and in some cases the cash that they produce.
And is that why, I mean, do you want to just talk a bit about Pantheon and why we went into Pantheon?
Well, Pantheon is very much a short-term trading asset, and one of the reasons we like it is actually it has outsized liquidity versus the market. So it's a company that has real liquidity. Even on its bad days, it seems to trade a lot more stock than most. So it has a decent following. And of course, alongside that, you need trigger events that will make that stock go up. And in their case, they have a large oil and gas portfolio, which they're drilling. And we expect that drilling to happen fairly soon, i.e. within the next 4 to 6 weeks. And typically a company that has a lot of liquidity like that and has a lot of interest in it, they tend to go quite nicely into those drilling programs. So we also have a reasonable amount of natural resources experience on this board. So it happens to be an area that we have a reasonable understanding of. Again, this is obviously a risk trade. There's obviously downside potential to it, but at this point we believe there is a more than reasonable chance of making a very good short-term return on that money.
Okay. Now, next question. Well, I don't know who, Ed or Lance, you both bought shares recently. Are you going to be buying more in the future?
Yeah, I mean, it's certainly something we'll consider. I know Ed's telegraphed previously his intent to to buy as he's able to do so. I mean, as we're able to do so means a few things. We've got to have, personally, got to have cash in hand. We've got to be outside of closed periods and not holding inside information. Certainly it's something that we'll look at.
Okay. Absolutely. I mean, I'd like to own a lot more of the company, but again, there are challenges to doing that, and we all live in challenging times at the moment. So, but certainly, as I previously stated during this AGM, I think that the shares are trading at a silly number. I never thought I'd be able to buy them at the level I have. I would happily pay somewhat more for them, quite honestly. So, I was delighted to be able to buy them, but equally, it's a bittersweet pill because I would much prefer the shares to be trading in a range that is more fair. And I think you've covered that range, and I believe this is going to be online, so people can go back and watch this and look for those specific nuggets.
Okay. Well, thank you, everybody. Has anybody got anything else that they'd like to say?
No, just thank you for everyone's time, and please be assured that we are absolutely doing our best to deliver real returns on our existing investments and make some very good new investments. We're not interested in making investments that are going to make, with our bulk of our capital in our venture strategy, single-digit returns. We're looking for, multiples on our money type returns. So that is why we're taking the time to make sure that we diligently put together a portfolio that represents the new way that Seed is moving, and we can organically grow our valuation both by NAV and hopefully by market cap, and we think we've got the platform to do that.
Okay, so well, thank you, everybody, and thank those people that are still hanging on at the other end of the virtual world. We do appreciate particularly those shareholders who have been with us on this journey for quite some time, and we welcome new shareholders, obviously. And so thank you very much. Please keep in touch with us, and we look forward to seeing you this time next year. Thank you very much.
Ian, that's great. And thank you to the board for updating attendees online this afternoon. Could I please ask attendees online not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the board of Seed Innovations Limited, we would like to thank you for attending today's annual general meeting. That now concludes today's session, so good afternoon to you all.